And welcome to another episode of Expert Speak. I'm Michael DeLon, and today I am talking with Patrick Grimes. Well, Patrick, thanks for squeezing me in. You've been as busy as I have been today. It sounds like so. Thanks for squeezing me in.
Happy to be here, Michael. I'm looking forward to this.
It's going to be a really fun conversation because so Patrick is founder and CEO of Invest on Main Street, and we're going to take a deep dive into how he helps entrepreneurs, business owners, people in general, really to do some really cool investing to create some passive income outside of the stock market. So, but I'm going to let Patrick kind of really explain all that. So as we get into it, Patrick, tell us, how in the world did you get to where you are today?
Well, I have a book called Persistence and Pivots and Game Changers out. That's probably a short answer to that. I started as a mechanical engineer and snot-nosed engineer at a high-tech firm and doing machine design and robotics. And they said, hey, look, why don't you invest in real estate? Don't put all your money in stocks in the stock market. Try these other, what ended up being what I now know as alternative investments. And I dumped as much as I could, as soon as I could, into deals that were sure to double and triple my money every year. And that was back in 2007. And I lost everything in 9, 10, and 11. And so I had, right. Painful, got raked over the coals super bad. But then I doubled down back into my engineering career, got a master's in engineering and an MBA. And then there I was, ready with money on the sidelines, not trusting the stock market and looking for the right tax shielding and inflation hedging and wealth building. And it was back into real estate, but recession resilient markets and ones where I know I could buy for cash flow and not be hanging on to an asset that is a money hole. And did a bunch of analysis and made some good investments and eventually traded single family up to large commercial multifamily deals and started syndicating. And then now I'm full-time private equity and alternative investments, real estate and oil and gas.
That's quite a journey. I love stories like that because we all have our journey of how we got to where we got. And to me, that is one of the most fascinating aspects of talking with anybody is how'd you get here? And now let's kind of pivot, going back to your book title, and talk about, all right, what are you really talking about when you say alternative investments and things? Because even that word scares some people away because they're like, what is this? And it's like, no. Here's what we're talking about. Bring it down to the Main Street level for people and just say, here's what I'm talking about.
Yeah, so basically the financial IQ of America is limited in investments because our employer says, don't worry about retirement, just invest in your 401k. It's good because it's matching. Maybe you graduated to an IRA or maybe even a financial planner, but it turns out all of those traditional investments are in the stock market mostly. And they follow that sentiment, that wild roller coaster. And they basically work until you die and dwindle your retirement down until you pass, and you don't leave much down to your heirs. Alternative investments are, aside from that, they're non-correlated to the stock market, like real estate. Not all the time when the stock market's down, sometimes the real estate's up. And like in energy, we're in it right now, real estate's waning and stock market's down, but energy's up. And so these are the kind of alternative investments that are what we call non-correlated or not on the same, that if you choose and don't follow the traditional path, but follow the path of the wealthy into these alternative investments, you can build a longer accelerated retirement and grow in through retirement to leave a legacy and protect yourself from interest rates and protect yourself from inflation and cash flow and all these great things that, Robert Kiyosaki and Rich Dad Poor Dad talk about. Mm-hmm. But those are the types of opportunities that we offer.
Yeah. And I want you to dive in a little bit and talk about how you make it more simple for people, because, I've read the books and I'm like, okay, I got to buy real estate. Now I got to go figure out real estate and go find a house and go look at a house. And I don't have time for all that. How does it work?
It's really good that you bring that up because I was one of those guys that super demanding high-tech job. And I was loving it. I'm a huge nerd inside, right? Doing the engineering stuff. And so, but then I'm like, I have to go invest now into a completely different industry of which I have no experience. And wasn't necessarily my passion to become a landlord, especially in single family. And I was moonlighting, and all my time from my family, friends, and hobbies was now on this real estate portfolio. It only got worse and worse and worse as I became more and more active in single family. And so what the passive investments allow you to do in our large syndications is they allow you to invest without taking time away with operators that have decades of experience. So you don't have to have that, as well as being a high income expert in your industry of where you're at. Instead of trying to figure out that again somewhere else, you can invest passively. Also safer. Like me, when I was signing on loans by myself and trying to do deals on my own and putting properties in my own name, they drug me over the coals because market corrected and I was on the loan and I was on the hook.
Yeah.
Also, you can get sued if you buy it in your own name, and that happens too. People in our large multifamily syndications, you don't have to sign on a loan or put it in your own name. It's protected. It's asset protected. Each of those deals are protected from each other, and we don't have to do it in your backyard where you can manage it. We can do it in the best markets to invest in the country, all of them, and diversify. And so that provides you those opportunities both in energy and in multifamily, which are both tax advantaged. And the government subsidizes housing, food, and energy. So they want us to house, energize, and feed America. So you invest in these assets at scale, and large ones, you can do it safely in a better tax shielded environment, and you're off enjoying your life.
Wow, you make it sound so enticing. I like it. Because it's that passive investment. You're taking your money, you're giving it to your company, right? And I'm putting my money in with a bunch of other people, right? That's, I think did you use the word syndicate?
Yeah. Yeah.
Okay. So you put your money in with a bunch of other people and you're investing in, let's say, a multi-family, like an apartment complex. Am I in the ballpark?
Yep. Yeah, absolutely. Yep.
So I'm a part owner of this massive thing. And then because it's growing over time and there's cash flow and all of that, then I get a dividend or something like that. You got to get it down on the bottom shelf for me, man. I am a Main Street guy.
Yeah. Yeah, sure. So, you just got to think of it. If you went to buy a property yourself, you'd probably buy a property that needed fixing up, and you would probably be able to rent it. But after you fix it up, you get higher rent. And after you fix it up, it'd be worth a little more. So we'll buy, instead of single family properties that you do in your own name and you get debt in your own name, we'll buy large 200-300 unit properties that are existing construction. So large apartment communities. And we'll buy them in the same way. The ugly one on the block from an owner that's kind of neglected it, rents have fallen below market. They need fixing up. They need rehab renovations. And so we'll buy them, we'll cash flow. But as people move out, we'll renovate the units, just like you would in a single family, get higher income. That's why we pass forward. It's called monthly passive income, right? That's what Robert Kiyosaki keeps talking about, right? That while you sleep. And then at the end of the day, once we've improved all the units, we can sell it. We can sell it just like how a single family home appreciates, and multifamily appreciate faster and bigger because you got scale, and we'll sell it at a multiple, right? So you're making a lot on it, and we'll help trade you for it through a 1031 exchange. So you don't have to pay taxes. So it allows you to continuously cash flow, build and grow your cash flow while building your net worth and the valuation. And then we can trade you for it to the next one and grow your cash flow and build your net worth and trade you for it. It's what the wealthy have been doing, like the Donald Trumps of the world for centuries, but through pooling investors' capital, passive investors, and having a small group of sponsors, experts in charge of these investments, we can now compete with those larger institutions and wealthier individuals for these institutional quality assets, and you can enjoy the benefits of these while being a smaller player and enjoying your life.
I love that. I love that. And are there, and this may be a bad question, are there like investment limits? Do you have to be like a billionaire before you can invest with you? Or is this for like really, honestly, like a Main Street guy who's been working for a while, or he's got a business and he's got some cash sitting over here? May not be millions of dollars, but it might be a few $100,000, or who knows what it is. What are some thresholds? Because I've heard of these things before, right? And then I'd go research and they're like, well, you have to be an accredited investor with it. I'm like, well, I'm not one of those dudes. How does all this work for normal people?
Well, the SEC does require firms like myself that get on a podcast and talk about what we do to limit our investors to accredited investors. Okay.
Mm-hmm.
Now, that doesn't mean you've taken a test somewhere or done anything to become accredited. But
Yeah.
the SEC, in all their wisdom, I hope they're not listening to that, came up with just completely arbitrary numbers associated with it.
Yeah.
And those are, do you make 200,000 a year for the last 2 years with a reasonable expectation that'll continue as an individual, or when combined with your spouse, is it 300,000, or do you have $1 million in net worth, not including your personal residence? Now, there's lots of ways, because you add up all your assets, and there's a couple other ways you can do it too, but you add up all your assets, and most individuals, especially if you're an entrepreneur, a business owner, a manager, or been around and socking away money in IRA, 401k, or whatever, they can qualify. Now, if you don't qualify, that's okay. You can let me know. I can forward you to other individuals that have similar offerings, but they can't talk about them. Because if you're openly talking about what you do, the SEC requires that you only work with accredited investors. Kind of a catch-22.
Okay.
But if you call and tell me, I can point you to somebody else that's doing them, and he can build a relationship with you now, and he can let you in on his next one, because you can be a pre-existing relationship of his. Okay. But that's how that works. And our minimums are $100,000, and we made that decision long ago because we're raising $200 million for a diversified energy fund, which allows you to participate in dozens of natural gas and oil wells across multiple states. Well, you can't do that at $10,000 or $20,000 at a time. Right. And I talk to all my investors one-on-one. I value the relationship, and so I need to keep my minimums that high so I can keep that experience going. It's a core value of mine. Right. And people can book a time. You can go book a time on my calendar. And most of our multifamily apartment communities are anywhere from $7 to $30 million raises too. So they're really institutional quality assets, and we need somebody to come to the table with enough to, so it doesn't become too. I don't have any more hair to pull out now. My hair's all gone.
Well, yeah. I wanted to broach that topic because I think there's a lot of people out there who probably could qualify, but they just get scared away because we are uneducated, right? We're ignorant at some level. And I wanted to say that I'm glad you answered the way you did, because I would say book a call with Patrick and if this intrigues you at all, book a call, have the conversation, and he may say, hey, you know what? We can't work with you, but I know some guy, and let me introduce you to somebody else. And you get started on the pathway. And I think that's the one thing that came out of reading Kiyosaki's book, and well, most of every other book I've ever read, is get started, take a step and start down the line, right?
Yeah, sorry, go ahead.
No, go ahead. I was going to say, it doesn't mean you're buying today. It means you're starting the research process.
100%. I have investors that set up a call because I write for Forbes. I've got the Amazon #1 best-selling book. I do talks on stages on strategy, wealth building, economics. I'm doing one on oil and gas here coming up. And people set up calls and they start out with saying, hey, look, I can't invest with you because of XYZ. I'm not liquid, I'm not accredited. I was like, well, let's talk about it. Well, did you know your business can be valued and you can become accredited? Well, did you know that you're well strapped in your equity in your home? And what's the return on that equity right now? Well, if you put that into a couple different deals, you realize you could retire next year. Or they have a rental property and they've got a bunch of equity in it. And they're like, well, do you know you can 1031 exchange that into a partner into one of our assets, get rid of the tenants, toilets, and trash, and we'll be driving your wealth in much better assets. Or even better, if your funds are trapped in an IRA or 401k and they're all in the stock market, I have articles in Forbes on how to trade part of those assets into self-directed qualified retirement plans, which will allow you to rebalance your portfolio into alternative investments by reinvesting your self-directed, your IRA 401k into self-directed variants and putting those in these deals too. So there's a lot of ways you can get involved in alternative investments. I think the reality is that if you read my passive investor guide on my website, talks about it shows right there, it says the middle class only has about 8% of their wealth in alternative investments. The high incomers have 25% of their wealth in alternative investments, and the ultra wealthy have 50%. I challenge people. I was like, look at your portfolio. Where's it all at? Is it in savings and stocks and bonds and 401k? Well, when are you going to start investing like the wealthy for cash flow, inflation hedging, and tax advantages? And if you want to look forward and start investing like the wealthy, we'll do what we can to help you out. By the way, I'm not an accountant, a CPA, or a financial planner, an attorney, so I'm not giving you investment advice, but all of what I'm saying is on Forbes. I got articles on IRAs and 401ks, 1031s, all these passive investments. So this is all public knowledge, and I'm not giving advice. You need to talk to your own group, but this is all stuff that people need to know.
Yeah, it absolutely is, because there are people out there, business owners, who have money in a SEP or a whatever, and we're limited, right? Because we are spending our days building our business, not trying to be financial gurus. And too many times we go to the bottom most common denominator, which tends to be a financial advisor, which tends to be in the market. So what we're saying is that's okay. Might want to have a call with Patrick, or go to his website and download that passive investor guide and start educating yourself, but you don't have to do all the work. That's why you have a phone call with Patrick and say, here's where I am. What do you think? Here's what I'm trying to accomplish. How does it work? And all that. And just take baby steps towards that. And you may take 18 baby steps and say, yeah, that's not for me. That's okay. But you're going to be so much smarter, so much better. And like you said, yeah, the wealthy do this. So we should probably at least consider it, because it's not like this is a new thing that you just, cooked up over the last couple of years, right?
No, this is just the mechanisms the wealthy have been using to grow their wealth. And especially now when inflation is such an issue, especially now when interest rates are on the rise too. Investors that found a haven in real estate out of the stock market are now seeing a softening of the real estate market. And that's why we're launching large diversified energy funds, because you see a brighter future, not indexed in energy and not indexed in the interest rate. And cash flowing much stronger. So this is the time when you definitely want to take a hard look at your portfolio and make sure that you're in non-correlated investments that aren't riding the wave right now, the correctional wave of the stock market and real estate. And I think it's so important for people to take a hard look at themselves and their portfolio at this point.
Yeah, absolutely. And that's a great way to kind of end here is take a look at what you've got. And Patrick, if somebody is interested in reaching out to you, what's the best way for them to get a hold of you?
Well, yeah, so Invest on Main and then Street, Invest on Main Street, all spelled out. That's our website. And at the top, we have our investments. Patrick at investonmainstreet.com is my email. Happy to send email. I'd set up a call. We can have a chat about your goals and see if we get your point in the right direction. Also, I'm happy to offer a copy of my book to your listeners if you'd like, Michael.
Yeah, that would be great. So his book is available on Amazon, but why go there when you can get it for free from Patrick, right? So what's the domain? And we're going to give you a coupon code. I don't even know what it's called, a promotional code. And it's just the name of our podcast, Experts Speak. That's the code. Where are they going to find your book?
Yeah, so Persistence, Pivots, and Game Changers, Turning Challenges into Opportunities. It's an awesome book with some really cool guys in here. Phil Collins of the Def Leppard tells his story. Russell Gray, the real estate guys, NFL, NBA players, and there's me here with hair, much young. And it did make an Amazon #1 bestseller. I bought a bunch of them. I really believe I tell my whole story, and for the entrepreneur, for the business owner, for the high income earner, this is a great book. It talks about how people made it and made it out through their persistence and their pivots. Amazon #1 bestseller. If you go to investonmainstreet.com/book, investonmainstreet.com/book, that's the secret link. And there's a page where you can fill out your information, use the promo code Experts Speak, and we'll make sure to send a signed hard copy out to you for free.
That's awesome. Patrick, that's a great offer. Thank you. I think people need to get that. They need to read that book. They need to get your passive investors guide, and they just need to book a call. If this has any interest at all, book a call with Patrick, have a conversation. You can tell from this conversation, he's super high pressured sales guy. He's going to keep you on. Give me a break. Reach out, look at your future, talk about what's going on, and just have the conversation. Patrick, this has been really, really interesting. I think you're the first guy I've ever had on my podcast that talks about this kind of alternative investing and everything. And it's really intriguing. And so I hope my audience reaches out, gets a copy of your book, gets your download, and reaches out and schedule the time, because it is really neat to find good ways to diversify and to find other ways to invest. So I appreciate it. Thanks for being my guest on Expert Speak, Patrick.
It was a great time, Michael. Thanks for having me.